joining us on the broadcast is Peter Cardillo. He's the Chief Market Economist of Spartan Capital. Hi, Peter. Good to see you again. Peter, what's your sense of how much of a rate cut are we going to be seeing today, and what really will be the implications of a 25 basis point rate cut versus a 50 basis point rate cut?
I think we're headed for a 25 basis cut rate today, and I think the Fed is going to start, being cautious, like they were when they began raising rates. They started with 25, and then, of course, they became a little bit more aggressive. And I think the same scenario is going to play out today. And this is, the communique today is going to be quite important because we're going to learn what's the Fed's thinking in terms of economic growth, also on inflation, and maybe there might be some hint that they could get more aggressive, which by that I mean that we could be looking at a jumbo cup rate of 50% in December, or possibly 25 in November, 25 in December, which would total about 75 basis points. And, most of the macro news that we got so far indicates that the economy is still quite healthy. And we saw that yesterday, we saw that today with the housing starts, which were up rather sharply, especially permits. And so I think the Fed remains cautious. But I do believe that when we get the more inflation news next week, the PCE, that inflation is going to, that the index is going to show that inflation continues to move in the right direction. And that will give the Feds a chance to be more aggressive. And so, like I said before, the possibility of a 50 basis points cut in the next few months is a good possibility, or 25 and 25, which would amount to 75 basis points.
Right. So you believe that the Fed will begin a little more conservatively. Now, what sort of a knock-on impact do you see of this cut on the Asian markets, and particularly, of course, on the Indian markets?
Well, let's put it this way. Today's decision is very important for some of the emerging markets, India, South Korea, South Africa. That probably means that they will follow suit. We saw Europe go on its own initiative, and they cut. The Bank of Canada cut. And so I think those three central banks that I just mentioned are likely to follow suit. And that's going to be good news for the Indian economy. So whatever the Fed, the Fed today, today's Fed move is important, not only for the United States, but I think for the global economy as well.
Right, and finally, how do you see the impact of this potential cut with respect, to the talk of U.S. Going into recession on the back of the tech bubble that everybody's talking about, and, the labor data that's coming in?
Well, a recession occurs almost every 6 to 7 years. And, I think we're ripe for one. Is it going to happen anytime soon? No. Could it happen in 2025? Most likely, and that's why I think the Fed is going to have to be aggressive, because I think the Fed realizes that we're ripe for a recession in the latter part of 2025, and they don't want to weaken the jobs market too much. Otherwise, we could go into a deep recession. I think they'll try to cushion it so that if a recession occurs, it's going to be sort of like a dip-type recession where you enter and you get out rather quickly.